Welcome back to On the Move. Let's talk more about that emergency Fed cut we just got of 50 basis points. Ben Barzideh is a wealth advisor at Piershale Financial Group, and he joins us now from Illinois. Ben, let's dive right in. We're watching what stocks are doing, seeing some whipsawing in the last 30 minutes. What do you make of this Fed cut?
You know, I think a lot of people expected that it was going to be coming, but, today, in the fashion it was, that was certainly a surprise. I think it's good and concerning at the same time. The positive is it's good that the Fed is standing behind the market and what's going on, and there's a concerted effort by the central bankers around the world to help support the economy. But the concern it shows is that we're definitely going to be in some potential slowdowns, and we don't know what's going to happen so far. It's certainly a serious matter, and I think it signals that from the Fed.
And Ben, as we were talking about, a lot of the economic data that has been coming out recently has not taken into effect the full impact of the coronavirus here in the U.S. on sentiment. So you have to wonder if the Fed is seeing any kind of early indicators that would lead it down this path. So in reaction to this, your tone sounds more defensive. Are you getting more defensive in your positioning?
No, right now I would continue advise a hold position just like yesterday, and that really hadn't changed so far with what the Fed did. I think it was very necessary, and I like the fact that it's going to help investor psyche. And a lot of times, perception is reality. And being that the consumer holds so much weight in the economy, that the Fed wants to be ahead of the curve and show that, there's going to be a concerted effort. There's going to be potentially things done to help support the economy. But at the end of the day, it's still early, and we don't know what type of slowdown is going to happen. Hopefully, it doesn't get anything remotely resembling what happened in China. But if there are, closures of businesses and disruptions like that, absolutely, it's going to affect earnings. But so far, I think with what the market's gone down and with the recovery that we had yesterday, I think it is more appropriately priced with the risk right now. So I would not beef up the positions in stock. As a firm, we did get defensive about a month ago with some of our positions, but I would not sell or be buying.
Hey, Ben, I hate to tell you this, but I heard some bragging this morning, and people were saying, I bought yesterday, I'm a here. I would say that's probably a little premature. I have no idea. Sure. But I guess my question to you is, what do you look for entry points? And how do you sort of make that call? Because, boy, some people looking smart, but I don't know.
Yeah, I mean, we all have those friends who have never made a bad investment in their life.
Yeah, I know, right? Yeah.
But, we do have, in our own tactical portfolios, we have different indicators that we look at that gauge the health of the market and things like that. But just as a general person, if you're trying to figure out, hopefully is the bottom in, I would like to see at least a couple of good, solid days. A lot of times when we have the type of downturn that we had when it's sudden and fast like that, you do get a rally, but more often than not, you do end up testing that bottom one time again. So, somewhere maybe in between that, but what happened yesterday was encouraging, but by no means do I think that signals the bottom is in.
Hey, Ben, Brian Cheung here. So it seems like we're kind of in a floating mode, at least for the next 25 minutes or so as we head into that Powell presser. But I'm just wondering, based on the market movements that you've seen so far, what would you expect to see as a result of the 50 basis point cut that we got from the Federal Reserve? Would you expect there to be any other residual effects, an addendum to that, based on what the BOJ and the ECB end up doing in response to the Fed moving first on this?
I think so. I think just today, we're going to continue to get a lot of choppy sideways type of markets because, everyone's trying to kind of price in what this means. And I think that's going to take more than just a few hours to figure that out. But bottom line is as a whole, all the central bankers, including us, are starting to get a lot more dovish. So we look at how's that going to affect certain assets and things like that. So, as far as areas that we like to invest in, things like that, I think we continue to want to look at defensive sectors, things like utilities and healthcare, and but although technology will get a big boost as well. We like REITs, I think, in a low interest rate environment, and who knows how much lower ours is going to go. Things that pay a decent dividend are going to become even more attractive. So there's going to be a lot to price in over the next few days. But once again, the greatest concern we have right now is we just don't know what type of slowdown we're going to get hit here, and how bad the virus is going to be and how bad it's going to spread.
Right, there is a lot to parse through here. Well, Ben Barzideh is wealth advisor at Piershale Financial Group. Ben, thanks for joining us.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.